Gonna be a quick little scan for the week of the 21st, right? Really just going off of the ideology from last week, the same kind of concept and where the opportunities are lying and where they continue to lie. I don't think that necessarily has changed. It's just the perspective that I see here is a much higher time frame perspective that takes a lot of building out, right? A thing that I like to preface a lot of times is that um, a thing that I like to preface a lot of times is that you have to have a specific time horizon for your thesis and your trade and execute accordingly, right? And sure, there's intraday opportunities here, but that's not really my edge. Is on a day by day basis. I like to focus weekly, monthly, and quarterly, where you can let those opportunities breathe a little bit and really let them develop and pan out. And my thought process for May has not changed. I knew that the potential for this to happen was always there. We're sitting a little bit under 6% from those May highs on the S&P 500, just a little bit under 4%, around 4% from those June highs, that June 11th cold CPI print. This is all in the context of a 30% reversion off the lows, where we had this low liquidity environment in the summer, but excuse me, overpowered by those flows. And I truly do believe that that's coming to an end. And I think that this is going to be a broader top for the equity market for the next couple of years. But that is getting a little bit too extensive, right? Like I said, I don't need to focus on the 1 minute time frame. I also don't need to focus on the 1 year time frame, right? I like to find the middle ground and the good fine line between the two to really develop a good edge in the equity market that I think is very lucrative and vulnerable depending on the execution that you have, right? So my main focus and the main trade that I'm focused on is that January position on SPY, right? Like I said, we're just about 4% from the July highs at the high of day on Friday. We don't really see anything super appealing as far as like a big, large buyer this week. It's more or less just waiting for that window to open up, right? In which we had expiration. We saw the massive move on Wednesday that was bid up with a notable amount of volume, and we see the continued exhaustion as we develop those new highs. We see the distribution building out within this range with the clear gaps to fill below, and we're now entering a 2 week window from the 21st into the beginning of August. The 4th is that Monday, first week of August. We're entering a 2 week window from the 21st to the 1st, basically, where we have tech earnings, we have data sets, and we have an opportunity to really see some potential volatility in the equity market for the time being. So, with that being said, right, the main position that I'd focus on with those Januaries, and you just have to be patient. If you begin your position over here in June, you have to understand that a new all-time high is very probable. There's a high probability that that's going to be the draw, especially when we have those July flows and June flows as well, right? Like this was, into the quarterly expiration where we then begin to build out that distribution, right? But now is the window, I think, where you can get a little bit more aggressive on that sizing and that exposure short side on Januaries. With that first target being 600 at June 24th gap, and then 580 being very pivotal, and then 564, right? And this all is a Q3 trade. I think this happens in August to September. That's no more than like a 10% decline, right? And I do think that that's very probable. You look back at when the summer of George ended in July of 2024. This was a 10% decline relatively quick, although a completely different scenario in my opinion. That I personally would not expect a major vol event and capitulation like that, where it's immediately bid up and we have a massive change of hands that sparks a really structurally sound rally. I would be a little bit more keen and more happy and content with a slower, lower vol, stair step down into the gaps below, and then maybe a macro lower high developed in Q4 or something. So that's kind of the focus throughout that time frame, right? But when we just look at the hourly chart, I mean, this is a distribution just beautifully panning out, right? This is our, breakout to all-time highs, our new high established on the 10th that stalls, our CPI kind of exhaustion, and then nice leg lower, where we then have that gap fill from the 9th, and we have the taking out of the lows from the low of days from the 9th, from the 8th, from the 12th, or the 11th, and from the 14th, right? And we have that major buyer that and volume backing that. The highest volume we've had since, April 9th. So there's a lot of relevance behind that as to why we see this leg to new highs, where we subsequently see a notable seller again on the Friday OPEX day. And this is just building out a distribution, and you have to be able to understand the time frame, right? Like the positioning short side here on the midweek data reversion, beginning the position on the 14th and then adding some more exposure on the 15th is very vulnerable. And you can target 620, 618, and then maybe 615 to 613. But when we see that volume backing this and we see that notable wick, you have to be a little bit more cautious and understand that it's still a short side trade, but we're drawing to a new high within this range where we subsequently see that seller again. So nothing really changes, right? I think if things can get going this week, right, I think we can push 613. I think we can see a lower high. And before those August flows enter the market on the week of the 4th, I think we can see 600. So I think there's going to be an opportunity intraday here, depending on the open, on like an hourly lower high. And I think we can push 614. It can happen this week. It also cannot. We have the Google report this week. We have the Tesla report this week. We have some minor data sets. Next week, the 31st, we have FOMC. So that'll be an interesting to see how this pans out as well, right? But it's really just understanding the higher time frame perspective and understanding how you want to operate within this range. There are long opportunities that I do see, right? This is kind of I like to show this, right? We have expiration, OPEX. We saw a nice move Tuesday and Wednesday, and then that was bid up. And then we see, this window opening up where I think we see 600 by August, right? The NVIDIA UTAD is very evident, but there are some good long opportunities that we can see throughout the broader market, right? And maybe they're not like great long opportunities where I'm slamming leveraged exposure on them, but that still have a little bit of room left for some reversion, right? I've talked about Google a lot. This is a really clean weekly chart where we continue to develop these higher lows where there's an opportunity to just trim, re-add, all the way up into this peg from February, right? Where we see this nice weekly look and this nice volume back in the 23rds print, the higher lows throughout this range, and the nice consolidation underneath this 182 spot where we now kind of break out and repin it, pin it above on Thursday, right? Not a insane leveraged opportunity, not anything that I'm slamming, but a really good weekly chart that has a little bit of room left, but something that you definitely do have to take your profit on, right? Something that you definitely have to be, consistently trimming on those higher highs that we developed and noting the potential exhaustion as we digest this move. Excuse me. Within these highs, but also noting that the structure holds relatively well, and we're reclaiming pivotal points on a day-by-day perspective. So just monitoring those higher time frame closures and looking for 190, right? Look to 200, right? That's kind of the ideology behind that trade. Amazon still has this peg to fill from February. I do think that that's more than likely going to be the draw at the 230 to 240 range, right? We're not seeing anything insanely appealing on this chart, more or less just passiveness from that seller and the draw being into a pretty pivotal point. And the same thing with Apple, right? I've discussed this chart a lot, a higher time frame distribution, but we have this reversion trade. We have the gap up on the 14th, and then like 10 weeks of consolidation underneath the remainder of the April 3rd 10% bear gap, where we're definitely seeing that supply kind of be absorbed, right? We're not seeing a real aggressiveness from that seller anymore. We did see a nice print on the 3rd or on the 7th, but no real aggressive continuation. This is one that when the report comes in a couple of weeks, I really want to see either before or off of that report 224, right? That's that 618, and that's the full gap fill, where we can then, look to take it to 213, look for a lower high to maybe trade into some gaps below and sub $200. But all this consolidation within this range should result in a massive breakout that sparks a lot of demand and a lot of changing of the hands, taking out these highs, filling this gap, and could be a good opportunity for that seller that's been present on this name for a while now to really catalyze that and offload his inventory, especially if it happens off of a report like we could see at the end of July. So still a short focus, still something I want higher. Tesla has the report this week, but this is just not really a very, very appealing chart to me besides the weekly look. We had a really good long in June, right? We had a really good capitulation print on the pivotal range with a lot of volume pouring in at the low of day and a 5% reversal to pin it above that pretty pivotal close. And then the subsequent higher low on the following Monday, the 9th. All right, we rally into the bear gap. We consolidate under this range. We form that path of least resistance and see a 10% intraday move. And then it's like a failed breakout almost, where that buyer bails. We see the further digestion of this range. And, two pretty substantial bear gaps, right? 5%, 6%, where we're just not seeing the greatest daily candle closures, right? Like I said, we have a nice wickage on the weekly. We have a nice gap down that was rebid the following week on the 7th on the weekly look, and then now a gap up and a higher low and reclaim of those ranges, but just not really a substantial, like, like a behavior from a bid that I'm really confident in taking exposure on, right? I think this can push 400. If something does open up, we have the report Wednesday after hours off of 332 or 358. Maybe there's a trade in there for shares or for TSLL to push 400s. It's definitely a name that has a little bit of room left in the reversion-wise sequence, but not anything that I'm super, super confident on a day-by-day perspective. And, the weekly look is good, but it just doesn't jump out to me as far as a long opportunity goes. The other short that I'm really, really focused on and pretty confident in is nvda. This has not changed, right? This is exhaustive, this is disgusting, and this is coming into that window where we have a potential reversion candidate in nvda. This breakaway gap on Tuesday, a 4% day with a very notable influx of volume. And it's just, it's way, like, it's brewing. Something's brewing here, right? We have a very higher time frame distribution developing, and then this kind of UTAD above these highs, this massive, massive changing of hands and potential for, a large campaign to be established within this range that, in my opinion, will pull us back to 110 to 115 by end of year, by quarter four. But more or less will be a broader contextual UTAD on this name, where we see a large distribution and offloading of inventory since March of 2024, where we were up 800% off 2022 lows, right? I do still think that nothing really changes my thesis within this name, and definitely something as well as those SPY Januaries. When I look at the higher time frame perspective of this name, a positioning via nvds would not really be super, super gross to me, right? Yeah, obviously the beginning position would be built out down here in May, right? Especially off that report where we see this kind of failed distribution. But that's like a 30% drawdown on NVDS, and you could take some good exposure up here. And this is a potential parabolic short candidate, but nothing has really shown me yet, right? The exhaustive gap ups are notable. You go ahead and you look at AMD, and you look back at the distributions here. It takes some time. You have the breakout, you have the massive influx of volume like we had on NVIDIA and the subsequent exhaustion, and then you have to passively wait for that large spike and changing of the hands, right? We see how we break out to new all-time highs in June, and it's just this, larger spreads, higher volume, influx of demand, and then subsequent exhaustion, right? It's signaling a very aggressive changing of the hands that just needs some time to develop, right? And it's a similar thing with Microsoft, in my opinion. There's been no real good opportunity on this name to take a long exposure besides the April lows. I think we're continuing to build out this kind of UTAD within this broader contextual distribution. At the minimum, I think we're going to revisit the May peg, but I don't really like this chart. Meta as well is another gross look that I do think has been developing a distribution since this January or February peg from 2024, where the lack of lower lows is notable, and the exhaustive highs and then subsequent stall is also notable. If this is our new all-time high, this is 20 weeks, 120 trading weeks, 140 days for a 1% new high, right? That's not a good look. But I haven't seen anything notable just yet. What else? QQQ is in a very similar spot to SPY, developing that UTAD, right, where we had that notable Wednesday wick. We see the rally continue on Thursday into a Friday exhaustive gap up. We have the gaps to fill below. This is just still not a good look, and I do think that this can push us into that 531 spot within the next couple of weeks, and then down to that 509, and then down to that 492 range. This quarter, same kind of context here on Q. There's nothing really different besides this potentially being right a little bit more volatile, specifically the basis of it being more technology heavy. But a very large seller on the Tuesday print, and not a good look in my opinion, aligning with my thought process on broader equity market. XLF, this is one that I've said before. This is going to take some time. I wouldn't be surprised to see this develop 2 to 3 higher highs at these new all-time highs, and that's exactly what we see. we see the stall, we see the pullback, the bidding off this gap from the 24th, and a nice kind of pop on the Thursday print, right? We had a lot of bank earnings this week, some of them putting in relatively ugly candles, some of them putting in, um, you know, nice looking candles at gross spots for those candles to pour in, but notable wick here, right? Now, this is something, like I said, that will take a lot of time, similar to in Q1. Um, it just, we saw a floor established, we saw, 3 highs sold off, and it took a little bit before we saw that catalyzing all-time high breakdown in March that really sparked the 10% reversion in the lower high. So something I'm keeping my eye on, but no real clear edge quite yet, right? Like I've said, we have JPM putting in a relatively gross earnings candle, kind of stalling within this bear gap. Um, Not really like a good look, in my opinion, on banks, but nothing that's super notable yet. And it's just been a patience game. That's why I said, the patient trader eats here, right? We have an all-time high failure on Schwab on a distribution that's within a distribution that's within the distribution, right? Like, I think this is a distributive range where we're seeing, just lack of aggressiveness from those sellers and more passiveness than anything happening within a distribution that's been developing since the October report, happening within a weekly distribution that's been developing since the bank collapsed in 2023. Like, I think this revisits $50 next year, but I'm not going to execute on that. It's more of a patience game. It's more of a red flag here, red flag on Visa, um, but nothing like for me to trade quite yet, right? Red flag on MasterCard, but nothing for me to really trade just yet. We have notable gaps from the 13th that need to be filled on both of these names, so that could be something that's kind of a draw with those reports. We see a really ugly candle on the BlackRock report, and then a lower high on this kind of bearish volume divergence. So that's something to note. Morgan Stanley with a relatively ugly candle on a weekly perspective. Berkshire Hathaway has been such a notable underperformer, and I feel like I've seen nobody talk about this. We're now at the open of the April 7th candle, digesting the entirety of this move. So something I'll keep my eye on a little bit. Bank of America with the report this week as well. There's nothing notable for me just yet on these names. Wells Fargo with a pretty ugly candle. Citigroup with a pop, but I don't know, this shit's fucking. This is insane to me. I mean, how does this name not revert any of the 2008 losses? I mean, obviously some of them, we were at fucking $10, but this stock was at $570 in 2007. That's insane to me. But I mean, that's the financial sector, right? Like, nothing looks really appealing. We look at energy, right? Energy put in a questionable daily candle closer here. This is still a commons focus, something similar to Google, where those higher highs and higher lows, trimming, re-adding, and managing your risk is very important on these. Like I said, there's a couple of longs that I like, but you have to be pretty cautious with them. You see, like, Starbucks had that failed breakout and whatnot. So things like that, right? Like, this is a really questionable amount of volume. Yes, it's July OPEX as well, so that holds a lot of weight. I do think that this can push 94. I also think that this can reverse to 72. A name that looks pretty nice and has held up is VLO. This was a nice capitulation on the Wednesday print, where there's a lot of volume backing this like 15-minute candle, and a lot of volume backing this 935 print, where we then see the reclaim of this previous like break of structure for a pretty appealing weekly look. This could still revert a little bit more. You're looking at like another 8% move on shares potentially developing into the kind of August reversion where this underperformed notably. But a name like Oxy, I don't really like this too much. Personally, VLO and XLE are the only focuses. CVX got hit with a lot of volume backing this print. Highest volume we've seen on this name and since 2022. But I don't know. It's really going to be how do and a lot of the volume comes in at the high of day, right, on this Friday print. So questionable sector, something I'd probably have that risk off exposure, but nothing that's like insanely ugly. Definitely something that I still think can revert a little bit, but also you have to be pretty patient with these names and also have to be pretty cautious because we do have two notable footprints within these gap, like coming off of this gap now showing And we have a gap to fill below from October of 2022. So that's something that you could keep your eye on. SMH, like I said, the semiconductor space, we'll talk about TSM, which is another distributive structure that I think has been seeing money rotated out of since that March print. This is an exhaustive all-time high top, but then we see that notable buyer on Wednesday, and you have to understand that the draw is going to be a little bit higher. It's exactly what we get with no true buyer, but you have to note that. ARKK has been pumping. No surprise here. This is kind of that bottom feeder accumulation look in May of 2022 and January of 2022, and coming off of the COVID lows. And no surprise that this, similar to August 5th, sparked a nasty reversal. But I see really no clean opportunity, minus like Tesla as a potential shares candidate. Don't really have much of an edge here. A lot of these names like Hood are really giving you a parabolic top look at new highs, and I think that this is going to be the beginning of a potential, not even bearish equity market, but an underperforming equity market relative to the past 5 years. But that's another thesis, right? That's not anything I'm really putting a lot of money on. Mags, if some reports start setting it off, this could push new all-time highs, and that's going to be an interesting spot on the tape for me to see how Mags acts at the new all-time highs. Because once again, no structural higher lows, continued exhaustion at the highs, and a really unstructured rally propped up by things under the hood. So you have to take that into consideration. And Mags being, the Mags 7 names hold a lot of weight to the broader equity market. IWM, I don't really care too much about IWM. I do, this is major bar by bar imbalance in the February 21st print, and we do have just the same kind of lack of macro high or low here, so that's something to take into consideration as well, right? XLK, obviously tech sector, the S&P 500, SPDR sector fund, like shit. Just not a good look, right? You look at this, and then you look at like XLP, where we're seeing, underperforming sector and consolidation of this reversal, where this could have some individual names that outperform, like PEP that we saw this week. That's a broader directional read on the equity market for the time being, and this happened before, where we see these underperformers. I mean, I'll just go ahead and talk about it. I don't really care about too much of these. Bitcoin looks pretty gross on this week daily print. Last year, right, we had the rally in the summer of George. We had the June top and lower high on nvda in July, and we had the weakness in the tech sector, right? What did we have on PEP? We had gap down on the report that was bid. We saw structural higher highs and higher lows reverting into bear gaps above, and this outperformed every tech name throughout this window into August 5th, where then we kind of see the stall and exhaustion on this. So you look at that, right? What do you see PEP doing now? A phenomenal shares candidate off the 130 spot. We have the 2021 lows here. We have a lot of volume coming in, a lack of result from the effort that these sellers are putting in down here. We have notable influx of volume, the highest we've seen since COVID, since 2011, and a very notable exhaustion from those sellers, right? And it all happens underneath this April low. I said pay attention to those laggards, right? Pay attention to those names that see a pop in April and then don't see a nice breakout, right? Pay attention to those, because those will be opportunities later on. We have a nice sell-off on the report, subsequent exhaustion underneath these lows, established in 2021, notable wicks, influx of volume on the 20th, July or June OPEX. We had a nice spike on the 27th. Phenomenal shares opportunity, right? And the focus on shares here would be back, 5-6% into that earnings candle, cover that position, the good chunk of it, and then monitor this higher low and bull flag kind of developing into the report, where we see a fucking 6%, 7% move, 8% intraday move on the report. You can cover that position, and now you can have a sick opportunity to long the higher low within the peg on options with your profit, right? So essentially a risk-free trade. And a really, really big focus of mine going into this month and this window, if we see the proper digestion of this earnings print, this is a phenomenal long trade setting up to, the 150s to 160s. I said cover the shares because I don't really have a clear-cut focus for the shares, but that peg can definitely spark a reversal to the new highs, and this can outperform, right? I really do like Nike, like I said, but this needs a sweep of the $70 range for me to really be focused on it. This would be something, a sweep of 70 would be a shares candidate, a reclaim of that would be an options trade, and some gaps above that we potentially have to fill. And if we can see kind of that, this is a massive accumulation building out since quarter two 2024, right? Or quarter two 2024. And we have a really, really notable amount of volume pouring in April and a really nice spike pouring in on this gap that we just recently had in the June report. All happening under COVID lows and on a notable underperforming name, relative to where we're at on the broader equity market since 2021 highs. We don't really see, we do see some signs of a nice bid, but throughout this range, we never really saw any aggressiveness behind that, anything very, very appealing, very executable. Besides this offered a nice 2-day bull flag to rally it up into the $80 range. This maybe, but I don't really like this Friday print. This was a clean opportunity back in August 5th, but the relevance of the August 5th candle meant a lot. Now we finally see a nice, obviously we saw a 12% candle in August, the higher low in September. This rallied us into the gap where we began to show some exhaustion. Now we finally see, 20.5% weak and some low volume consolidation, but something I'd really, really wait on, right? If we can see, a sweep of this, you can bid some shares and you can push this up to $80, maybe up to 89, and then, maybe cover and roll it to 94 to 100, depending on the structure and development of said structure in this name. That's a focus of mine along with PEP. Two lower beta laggards, maybe not even laggards, but names that risk off low beta consumer names kind of theme that can definitely see some outperformance, not if, but when we see underperformance in the tech sector, and I think that's going to begin in this 2-week window. Palantir, nothing yet, but still a focus of mine on a higher time frame distribution. No real edge here, same like on Hood, but very ugly Friday candle on Hood. Really ugly Thursday earnings gap on TSM. And this is a name that I do think that the higher time frame distribution is developing. I do think we revisit $100 on this next year, but we just see the draw to new highs, and now we're kind of continuing to see that distribution develop. Here's a pretty ugly print with a nice leg that follows, and here's a run up into the report where they really kind of press the gas here, and we see a major breakdown the following session in terms of an intraday move and a 2.1% session closure to the downside, right, with gaps to below. So a focus of mine, but once again, just no real clear edge yet for an intraday position, or not even intraday position, but like an execution in the gaps below, right? Like I said, SPY Januaries is the focus, and then waiting for those opportunities internally, right? You have one here, scalp that to 620, 618, 617, right? That's this trade. And then we wait again and continue adding those Januaries, and then when the opportunity and the structure shifts on a daily perspective, you can slam the shorter dated exposure as well. Other than that, I really do like solar right now. So as far as like a shares candidate, I've talked about the climaxes building out on First Solar underneath the 2023 lows, all happening after this 40% rally in May of 2024, and then August 4th being your kind of initial low, and then the election being your secondary low. This report kind of catalyzing a nice amount of selling, and then we see, similar to PEP underneath some yearly lows, some important pivotal points within the chart. We see a lot of selling exhaustion. We see a lot of notable kind of climaxes building out. And then this gap down off the report, sparking a really clean, like 40% reversion, 70%, that's insane. Like 67% reversal, right? A really clean weekly candle closure with the highest volume we've seen on this name in, a decade and some change. And then you just wait for that higher low, right? We initially digest this peg, see a really clean move. Doesn't really show the most promise as far as structure. And then the draws to the full fill where we see the 18% session red day, right? But a lot of volume on a green to red print within a pivotal point, right? So you can definitely long some shares, cover some shares, re-add, cover again, and then we now finally have like an internal structure to play here to 200. You're kind of playing the macro structure and change of character in a weekly perspective on this higher low and on this higher low. Now you have the kind of defense of the June 30th peg here, and a pretty clean weekly look setting up for what should push us back to 190 to 200 potentially on this kind of weekly structure shift within this chart, where I would really not. I wouldn't be like so keen to push this to 260. It's something that you have to be a little bit more passive on in a very speculative sector. But when TAN starts to look like this, which is the solar ETF, right? See the election gap. I mean, we obviously see, this is a beaten down sector, but we see this really nice rally and then subsequent consolidation and potential higher low off of the election candle. There's a edge here on solar for some commons that could be of good use. Um, what else? I talked about Nike. Unity looks like we're heading for a new low on Unity, or not Unity, UNH. Unity is a fucking shitbox. And I like that, right? We have a COVID gap down here that's unfilled of about 10 points from 230 to 240. Very liquid lows. And then, what you want to see when something like this happens in this major capitulation and then historical volume on a wick like this is a subsequent structure in defense of that higher low area where there's a lot of intent behind that bid and then a really clean, follow through, right? We see a 30% reversal, and this happened 2 months ago, and we really haven't gotten anywhere. We defended the gap, but then we see this failed breakout above these highs into this, 18% print, failing, losing all that progress from that print the next day, and then just slowly breaking down and dripping down to a new low within this range where now I do think that this, similar to crowd, right? It took a little bit, right? We formed this low on a massive notable amount of volume, and then we saw the slippage a little bit lower into August 5th. Now I think that we can definitely look at this as a pretty good high potential focus for a commons trade once again. Most of the trades I like here on commons. If we undercut these lows, fill this gap, right, and we see a nice higher low, you can definitely trade this. And I'm thinking, if you could trade this 30-40% into this 335 to 380 peg, cover that, and then wait again for a push to 500. SE was a really clean commons trade. This is just a really clean chart in general, offering a ton of opportunities throughout this range. On a name that's beaten down 90% from the highs, we're going to have some interest here, especially because it's not necessarily like a penny stock. It's not a stock or a company that's absolutely worthless. If there's some value in this company and someone finds some value in this company, we're going to have, a reversion trade on this. It's just going to take a little bit more time. And we start to see the, preliminary signs develop in January and February of 2022. See the nice May wick. And then we kind of see the continued exhaustion from the sellers underneath that range with nice volume spikes developing. And then we see this breakdown on the August 2023 report where we see the notable most amount of volume on a weekly print of all time, right? 33% down red week. We then see that exhaustion happening underneath COVID lows where, keep in mind this sparked a 1,000% rally on this name. A nice spike, another kind of, notable consolidation within this range and continued exhaustion from those sellers, undercutting those lows again. The progression is lacking. 21 weeks for a 1.5% new low. We finally see the rally and the change of character, right? Here's a commons opportunity. Here's a commons opportunity. Here's one. Maybe here's one in January. Not really my greatest look. And then, we get the reversion trade. We get this higher low within this earnings gap from 2024. And then we see this, this is one of those things, like I said, a notable potential commons trade that develops within a broader contextual bear thesis into 2025 or into the end of the year. We see this aggressive rally, breakout on the report, stall, and then a really clean higher low put in, defending these high volume gaps, and notable kind of wicks and climax developing here, defending this earnings gap. 17% move on shares within like a week, and a really clean weekly look that could potentially push you to that break of structure and up to like 180. So clean commons trade, right? A lot of clean commons trades that are very, very easy, right? What I've begun to develop and notice over time is that, fuck looking for an intraday move on everything. There's opportunities on a weekly and monthly basis that you can take low risk, high reward trades, right? You can take a really objective risk of a loss of this on a weekly closure for, a 15% reward at minimum, right? Google, energy, great commons trades, Tesla, in June and mid-June to early July. You can take really clean commons trades, and not really have to worry about a 5-minute candlestick. So that's kind of something I'm beginning to notice, and it's I said it before with that mental capital, right? You can preserve your mental capital and still take high risk, high reward trades with very high potential moves, and then on those things that you're very confident in, you can take some leverage on those. But when you start to analyze every 5 minute candle and everything that happens, it begins to get a little bit stressful. And I think that you have to have there's a fine line between that. And the majority of the opportunities I see that are very, very worth it are on a higher time frame basis. Like I said, January puts, nvds. I sit here and you sit here and you wonder, oh man, like I railed this, but I didn't capitalize on the full move. Like I railed this and I traded this, but like I didn't capitalize on the 142 to 105 move. Um, I traded options here and here and here. Now, if I would have just bought NVDS, I could have had a very low risk, right? Objective risk at 142, 143, high reward trade targeting, 113. Um, and really capitalize on the full extent of that move without having to watch every 5 minute candle and trade, 1 DTE options on the report as my sole position, right? That can be used with a smaller amount of smaller amount of positioning due to the convexity of these instruments and can really be beneficial to make, your day or week, but your quarterly and monthly and yearly P&L should be made off a handful of common trades, in my opinion, or further dated options, right? There's an edge that you can find intraday, but I don't think that it really makes the most sense as far as risk to reward and then mental capital as well being a big part. So that's my focus. SPY January puts, NVDS, watching a parabolic short here, PEP bull flag, Nike sweep of the $70 range if we can see a pretty nice bid. I wouldn't really rush that. That'd be something I definitely would wait to kind of execute on. Starbucks, like this was a clean commons trade, but like off of this June 30th print, we make, a 7.5% move. We see the internal structure for some options that you can trade within here, like I said. But the failed breakout and then the bailed buyer, nice wick on the 17th, but I don't really care too much about this, right? I'm not really super attached to a position like this. Like clean commons trade, low risk, pretty good reward, but it's nothing that I'm really sitting here hurt on that you missed, the back 1% of that move um, on Collins, right? But yeah, it's pretty much it. Like I said, large focuses for me. SPY January's, maybe some NVDS. Commons on Google look pretty nice, where you can add in, 175, 181, look from 190 to 206. Do have a report this week, so definitely take that risk off. I still think XLE can push 94, but not a very high confidence trade at the moment. Something that I'd be willing to cut and then re-add into. And then Pep and Nike offer some opportunities. The commons trade on Pep was really, really clean. 15% move. You can cover and roll some options on that. It's a pretty low risk trade. First Solar is a commons trade, but a very speculative one. Right? If I had to really bulk it up, I like First Solar. I like Pep. I like Nike potentially to 90, 80 to 90 bucks. I like Google, and energy's a little speculative. I really like VLO a little bit more. These would be my focuses, right? That's 7 focuses, with all of these being, not really all of these. I mean, a lot of these being lower, no leverage, commons trades, tight trailing stops, and profit already locked in, and January positioning with a lot of time and ability to add in a new highs. Um, but then you look for the internal potential opportunities, right? If there's a really clean opportunity midweek on SPY, that's something I'd look at for a biweekly position. If there's a notable kind of continued exhaustion, you could maybe take some August and continuing to target 613 to 615 to 618. It depends on the tape, depends on the time frame, depends on your portfolio and what you're looking at. But that's my focus going forward. It's kind of these 7 names with less of an interest on like really like milking any of these longs like VLO. I mean, and Google both have reports next week. Um, Something you really have to be a little bit cautious about. Energy not putting in the best print. Definitely set those trailings like a close under 143 would be a great trailing stop, right? Google, break even stop or 181 being lost. And then looking at like Nike and Pep for some rolls, right? Like this would be a really clean roll on some profit from a commons trade on options. And then First Solar is speculative, but it is a pretty clean looking chart in my opinion on a weekly perspective. So that's my focus. A lot of commons trades, couple of options, and just continuing to play your game and find where the opportunities are present. And I do feel like the short-sighted trade is coming up within this window. I do feel like we're in that window where this can end. And I know I've been saying that since May and June, but nothing has changed my thesis. This is a quarterly perspective on this trade, and there have been opportunities along the way to long and continue this rally. I just wasn't able to be super flexible on that. So pretty much it. Good luck. Have fun.